I'm very encouraged at how the region has held up to the combination of a very strong commodity price shock alongside the US, well, at least the start of the US tightening cycle. Markets have behaved really orderly. Growth has held up relatively well, and we haven't seen the crisis that we were accustomed in the past. So I think overall, LATAM's reacting very well to a very tough external environment. That's, I think, another encouraging thing, that the region is in some ways, outside of maybe Mexico, being able to respond almost in a counter-cyclical way. Brazil and Colombia are both expected to at some point start easing rates in the next couple of years, even though the Fed's hiking. And in Mexico, the reason why they're hiking is probably because they are the only country in the region that didn't have to have a tightening cycle over the past 10 years almost since the financial crisis. So I would expect interest rates to rise a little bit in Mexico on the front end of the curve. I think overall in the back end of the curve, in most places you're already as wide as you can be. And I think LATAM in general is quite attractive. I think the hunt for yield pattern in the world is going to continue to be the case, and that should support the longer end of the LATAM curves. There is a real impact. Colombia had a material slowdown. Public finances have had a large shock, and the current account in Colombia is fairly wide, but it's reacting positively. Everything's starting to correct. The government is reacting positively. In Mexico is the other big country in the region that has been hit by oil prices. We're seeing a depetrolization of public finances, which has been positive. An investment and the positive windfall from the reform has been slower, but I think it will still arrive, and we're starting to see people prepare for that. There's huge amounts of money being poured into pipelines and things, which tell you that people expect the energy reform to kick off. It will just be slower. I think the region is generally underlevered. If you're going to see a world where people are picking their spots and looking for credit quality, I think the region is generally in good shape. Demographics are a big factor. You're no longer in the place where population was growing so fast that you couldn't keep up with public services like education and things like that. But you're also at the point where we have a very young labor force. So in that regard, I think Latin America is very well positioned. And I think also the way in which countries are run has become much more professional. You have fairly sound democracies throughout the region. So I think overall the region has better institutions, better demographics, and is financially in relatively good shape. I think if we were to have some kind of shock that would push core market interest rates up substantially, maybe excessive fiscal irresponsibility or some kind of confidence shock, there's some pockets in the region that would probably struggle. There's some countries where households are more indebted, although it's not terrible compared to other parts of the world. Another shock would be if we were to see the Chinese economy go into serious trouble. Latin America is still mostly relying on commodity prices outside of maybe Mexico. So a big recession in China would probably spell suggest a very bad picture for commodity prices, which would hurt the region. But I think overall the region is in relatively good shape. I don't think we're no longer in the world where it's a beauty pageant where we're looking at beautiful investment pictures throughout the world. I think overall the world has seen a material deterioration over the past few years, and I think Latin America, even though it's gotten probably a little bit worse in terms of fundamentals compared to where it was 10 years ago, in a world where everybody's uglier, Latin America is still right.